Hey, what's up? TIG here. So today we're going to be talking about the history of the stock market. Firstly, what is the stock market? What is its function and purpose? Where and when did it start? And how it has evolved. So without further ado, let's get into it. So what is the stock market? It's always good to start from the beginning and to understand the history behind the stock markets. The quote from George Santayana comes to mind. Those who do not remember the past are condemned to repeat it. So a stock market, equity market, or a share market is the aggregation of buyers and sellers of stocks, which is also called shares, which represent ownership claims of a business. So essentially for every stock that you are buying, you are owning a teeny tiny bit of that company. So what is the function and purpose of the stock market? The stock market is one of the principal ways that companies can raise money. This allows the companies to expand its operations by selling shares in the public market. Now the stock market is very liquid, meaning that investors can sell off their stocks quickly, as opposed to illiquid investments such as property real estate investments. Now the stock market is an important indicator of the health of the economy and its development. Rising stock prices are associated with an increase in business investment, and the wealth of the households usually follows, meaning that the average consumer spends more money. Now this of course is also vice versa when the stock market prices are going down. Usually then the market is just contracting and the households, they have less money to spend. So where and when did the stock markets actually start? You may have heard of the New York Stock Exchange, Nasdaq, Tokyo Stock Exchange, Shanghai Stock Exchange, Euronext, London Stock Exchange, Shenzhen, Toronto Stock Exchange, Bombay Stock Exchange. But do you actually know where and when it all started? Some historians say it dates all the way back to ancient Rome, where there are records showing where shares were traded. There were the Venetians in Venice, Italy, back in the 1200s, where the merchants in the region started trading in government securities. The original stock markets had their origins dating back to the 1500s in Belgium. Commodity trading began in Antwerp, where the Van der Bourse family had significant influence. The early market was known as the Börse, if I'm saying that correctly. However, these stock markets didn't actually trade any stocks at the time. And then the international traders took back to their home countries the word Börse, especially the Italian bankers, and they adopted to the word Borsa, followed by the French, Bourse, and the Germans, Bourse, and so on. Back in the late 1500s, when the East Indies was first discovered, explorers were hungry for trading opportunities and the new riches to be found. Lots of ships were lost at sea due to poor navigation, pirates, and of course bad weather. Investors back home who were financing these voyages were losing everything. So in order to mitigate the risks, the Dutch East India Company was formed, and this allowed the investor to invest in multiple companies that sent voyages to the East Indies, so that even if one ship was lost at sea, they could still make money on the ships that did return home from the voyage full of riches. This gave birth to the first formal stock exchange in a roofless courtyard in Amsterdam, Netherlands, when the Dutch East India Company was the first company in history that issued shares to the general public. This proved to be hugely successful, and a new financial boom was born. It came so quickly that there were no regulations put into place yet. In England, the South Seas Company, which was granted a monopoly to trade with South America, when shares were issued, they were sold as soon as they were listed. Even before the first ship had even left port, they had a fortune to open up fancy offices in the best part of London. News of this quickly spread around, and others wanted to be part of the action as well. New dubious ventures were created, with shares being issued in reclaiming the sunshine from vegetables. Or shares in a venture that was so important that they couldn't disclose the nature of it. However, it all sold. Needless to say, this could not be sustained. And when the South Seas Company failed to pay back on its dividends, the South Seas bubble had burst and made the England government ban the issuing of shares. This ban was in place until 1825. How has the stock market evolved throughout the years? In 1792, 24 stockbrokers and merchants came together in Wall Street, New York, and under a buttonwood tree, an agreement that was made that formed the foundations of the New York Stock Exchange. The Buttonwood Agreement ensured that trading was done directly and exclusively with each other under a common set of rules. The New York Stock and Exchange Board, as it was known back then, was not the first exchange in the United States. This honor went to the Philadelphia Stock Exchange, which was created in 1790. Only 2 years before the NYSE was created though. However, it wasn't long before New York took over the crown as the nation's financial center back in 1817. Along with the booming American economy, for the next 200 years it faced very little competition and became the most important stock exchange in the world. It wasn't until 1971 when the National Association of Securities Dealers, NASD, later automated quotations was added to the name, giving it the name NASDAQ, came along, and a network of computers executed the trades electronically. Trades became more efficient and reduced the bid-ask spread. In becoming a leader in trading technology, it is no surprise then that some of the largest technology companies, such as Apple, Microsoft, Google, Amazon, and Oracle, have all listed their companies on the NASDAQ. Although today NASDAQ has more companies listed on the exchange than NYSE has a market capitalization that is larger than London, Tokyo, and NASDAQ all combined, making it still the most powerful exchange in the world. Today's stock markets haven't come about within only the last 50 years. It has taken centuries to evolve from the humble beginnings in a Dutch courtyard into the powerhouses that they've become today. They play an important role in the health of the economy. They can facilitate economic growth. They help companies to raise capital in order for them to expand their operations and grow into the companies that we know today. Thanks for watching. I hope you found some use out of this video. If you did, hit that thumbs up. Don't forget to subscribe, and I'll see you soon for another video. Thanks.